Hello, Tebu. Okay. So we have an
Chair, if I may come in, I haven't received any apologies.
An apology from
there's no apologies from the committee chair, but there's an apology from the Minister of Finance.
the minister said. From the letter that
there seemed to be a challenge with your audio and connectivity. So there is a letter from the minister apologizing. The deputy minister is here. So you're welcome, Deputy Minister. Let's proceed. Let's move to item 3, briefing by the minister. And in this case, it will be the Deputy Minister. Over to you, Deputy Minister, Dr. Mason.
Thank you, Chairperson of the Standing Committee on Finance, Honorable Joe Maswanganye, honorable members, Auditor General's Office, as well as the management of all the entities present today, Director General of National Treasury, Dondo Mukhachane, and his team. Good morning, and thanks, Chair, once more for the opportunity to present progress on how our entities are dealing with the findings by the Auditor General. And I think it's important for all of us, Chair, in government, including our entities, to make sure that they are properly governed. And from time to time, AG provide us with a mirror through which we look at ourselves on whether we are properly running our entities, including the public finance. So this is quite important to increase confidence of our people in our government, in our state, because if we run these entities and government properly, the people who always vote for us, their confidence in our ability to run these entities also increase. And not only that, because the investors as well, they are interested in making sure that good governance of our government and our entities is in place, because no one wants to put his or her money into a government, into entities that are not properly governed, because they may lose their funds. So in Land Bank and other entities, investors always play a key role in advancing their capital to help us as government to do what we ought to do, but also for them to generate better returns. And we are committed, Chair, to make sure that we implement all the interventions that we've got to implement to restore better governance in our entities. And ourselves at National Treasury, we are also working hard to make sure that we fill vacancies at the senior administrative level. And we've had a number of interviews for Office of the Chief Procurement Officer, the Office of the Accountant General. But unfortunately, we could not find suitable candidates, but we've not given up. So like tomorrow, we will be interviewing the position of the accountant, of the Office of the Chief Procurement Officer and other positions, particularly GPAR, CEO. So we're really not giving up in trying to find suitable candidates for this position, because I think it's important for us to be stabilized at that senior level in order to make sure that there is no institutional uncertainty. There's always institutional stability in those entities. So without taking a lot of your time, Chairperson, I'm going to ask the Director General to start, but he will also advise us on the sequence on the presentation by different entities. DG, over to you.
Thank you very much, Deputy Minister. Good morning, honorable members of Parliament, the Chairperson. Thank you very much for the opportunity to present to you. We have structured our presentation as follows, Deputy Minister. We will start with the National Treasury first, and maybe outline some of the key issues. Laura was going to lead that for us. If she can put a presentation on the screen in the meantime, she will do that for us. And after that, Chair, we will then each entity will do their own presentation, and then after that, then we will be more than willing to get the committee to interact with us. And Chair, I don't know if you want us to do all, or maybe after each entity we deal with the entity consent. We in our case we did go through the committee. We interacted with the committee on substantial matters in terms of the annual report, but Laura will focus on what we are then doing in addressing some of the findings as outlined by the AG report. Thanks, Chair. With your permission, can I ask Laura to take us through our presentation as National Treasury?
Okay, proceed, DG, with your team. Do all the presentations of the National Treasury and entities. Then in item 4, we are going to engage on all of them. Thanks.
Thank you, Chair.
If I could please just ask the Secretariat to allow me to screen share so that I can put Treasury's presentation on. Colleagues, if the committee can please confirm that you are able to see the presentation.
Yes, Laura, we can.
Thank you very much. DG and committee, good morning. Just to confirm that as Treasury has already presented on our annual report in October and paid specific attention to share with the committee the audit findings of our previous financial year, we will, in compliance with the agreement made with the committee, focus on our quarterly audit action plans. As we had agreed, we would provide them to the committee on a quarterly basis. As we had previously indicated to the committee, National Treasury has set up a specific audit findings committee. This is chaired by the DDG of Corporate Services and includes the CD, Strategic Planning, Monitoring and Evaluation, the CFO and the CRO, as well as the internal audit. Internal audit acts as the secretariat of this committee and also verifies all of the submissions that are made by all of the audit finding owners on their progress. This committee, whilst it meets regularly, ensures that we address the audit findings. As of the 31st of December, on the audit findings from the previous from the financial year, we have resolved 59%. We are in progress on 33% and 8% are unresolved. Noting of those 33% that are in progress, 6 of those findings are currently in internal audit verification process, i.e. the audit finding owner has reported to internal audit and provided evidence that they have addressed the finding and the controls have been implemented, and internal audit is now in the process of verifying that in fact that is correct. 8% of our findings are unresolved. We have provided the committee with the breakdown. We have included in the breakdown actual business units so that you can see rather than providing them in the higher level order of just corporate services, we've provided the committee with actually where they sit within internal audit. So in terms within corporate services. So in terms of internal audit, they received 1 finding. It's currently in progress. ERM, they've resolved their finding. Financial management has 6 are resolved and 6 are in progress. Human resource management, 2 are in progress. Information technology, 2 are resolved, 2 are in progress, and 2 are unresolved. I must indicate to the committee that in respect of unresolved, some are still being implemented. There are a number of findings, specifically in the IT area, where the cost of implementing of resolving the finding may be prohibitive, and we therefore are looking for mitigating controls that will reduce the risk. And in other areas, the risk control cannot be implemented at this time because it refers to systems that need to be open for departments to utilize. And if we implement the control, departments won't be able to access our systems. So first, the updates and upgrades need to take place in departments that access our systems, and then we will be able to implement those controls. And we recognize that this delays our resolution of those findings, but it is imperative that departments get access to our systems. In terms of supply chain management, 1 is resolved, 1 remains unresolved. OCPO, 13 are resolved. Office of the Accountant General, 1 is in progress, and SPM&E, 1 is in progress. So this means of our 39 findings, 23 are resolved, 13 are in progress, but just to remind the committee, of those 13, 6 have been indicated by the process owner that they're resolved, and internal audit is doing the verification, and 3 remain unresolved. We have provided the committee with our full audit action plan with the status of each of those findings. So if there are any questions at the end of the presentation, we'd certainly be willing to engage. Thank you very much, DG.
Thank you, Laura. Chair, we'll ask Land Bank. I see Ayanda is on the call. Land Bank can come on. Thank you.
Thank you, DG, and thank you to the committee. I'm not sure if the presentation will be run by Secretariat or we run it ourselves.
Can you run it yourself, sir? That would be more convenient.
Okay, thank you very much. I'll share my screen.
In the meantime, can JIPA be ready to come after Land Bank?
Okay. DG, if I may be given rights to load, please. Secretariat, I'm not able to load the presentation. Oh, thank you. Is the screen visible?
Yes, it is, Sander. Thank you.
Okay, thank you, DG and Chair. Good morning to you and the committee members who are present. I'm going to run through the presentation, but before I do so, it's just a little bit important to outline where we come from. My name is Ayanda Kanana. I'm the CEO of the Land Bank. I am presenting the results of the audit, or the outcome of the audit. The audit that we were dealing with for the year 2021 needs to be contextualized. This audit covered 3 financial years. This is because the 2020 year audit received a disclaimer from the Office of the Auditor General. And that disclaimer meant that we needed to undergo a huge program of remediating or restoring the internal controls that are required by Land Bank in order to make sure that we restore the integrity of the financial statements that we had put out. So the 2021 financial year, we were audited for that. The AG audited the 2020 financial year again and the 2019, and we restated quite a number of accounts to make sure that the financial statements fairly present the state of affairs. Now, what we are sitting with is an improvement from that disclaimer to a qualification. The qualification that we've got, sadly, is not a representation of where we should be. We should be sitting at an unqualified audit opinion with findings. What happened is that one of our partners, one of our intermediary partners, whom we work with to advance funds to farmers in terms of loans as an agent of the Land Bank, was not cooperative with giving us the necessary bank statements in order for the AG to perform their audit. As a result, it resulted in a scope limitation. And this scope limitation meant that for a book as big as they managed, that scope limitation resulted in a qualification. Except for that, the Land Bank has been able to restore the necessary financial controls in order to get an unqualified opinion. If we had gotten those bank statements, and that's a sad situation because all they needed to do was give us the bank statements to validate where the payments are going. And that inability resulted in a qualification. So we've got an except for, and we are working to remediate that as well. The reason for this difficulty is that the Land Bank decided to insource the books that were managed by these intermediaries. We are left with 2 out of the 6 that we've had. And that was done largely to be able to regain control of the Land Bank book and be able to account for it internally, as opposed to having a dependency system. And this is amongst many other reasons that motivated this insourcing that was done. So I've tried to paraphrase most of the slides so that the members can understand that we've worked tirelessly to change the position of that disclaimer. Some of the issues relating to internal controls, Chairperson, were that the models that we had used to measure or rate our risk to manage the book were not calibrated for a number of years. And this dated back to about 2015. So we've caught up all that internal controls work. Our models have been up to date now. They are able to account and manage the book as we want to. And going forward, I believe that this improvement will bode well for a land bank that starts to see a lot cleaner audits than we have seen in the recent past. So we are proud as the land bank team, and I want to thank management and board members for working with us to ensure that the remedial action plan is a success. So what is the risk? The risk we've got now, Chair, is that we've got a 2022 audit that is upon us. The reason we are reporting this late and maybe you're not seeing clear progress is because the audit was only completed in December of 2021. And we've started now with the implementation work of the remedial action plan. This action plan, unfortunately, this time receives a shorter period of time to fix any of the problems. And our engagement with our partners is a little bit more intense around ensuring that we get the necessary information in order to account for this book. So it's important that we are able to get all the content, all the bank statements, despite the fact that the agreement has terminated. It is expected that the land bank must be put in a position to account for this book. Otherwise, these agreements have really done injustice to the land bank itself. So it has been quite painful for us to accept this outcome, and we're doing everything we can to prevent it going forward. So the remedial action plan is also trying to ensure that where controls have been identified as weak, we are able to boost those controls so that AG can rely on them and use a less substantive audit process to deal with the land bank. So we are busy with that. And to that effect, we've activated our legal team to engage with the agent or the SLA partner or intermediary, however it's being referred to make sure that all information, all bank accounts where land bank money was used is made available so that we can account to yourselves and to the auditors with a bit more certainty this time around. Just a bit of feedback around our position in terms of the restructuring of the bank. The bank has not been able to close on the default. We are working tirelessly with lenders to make sure that they assist us in making sure the bank is out of default. So we are working on a revised liability solution. The latest on the table is a third solution to try and get the lenders to get the bank out of default. Now, why this is important, it also talks to the going concern. The AG knows that the country at large supports the land bank. This has been mentioned a number of times. Appropriations have been made to the land bank to ensure that the bank commences with its developmental mandate and to make sure that it gets out of its event of default. So this is a particularly important piece to ensuring that future does come through, and getting out of default is exactly what we are working with lenders to achieve. This also threatens our existence in the market and supporting particularly those small to medium-sized farmers who have not been accessing the land bank for the past 2 years in terms of support. So that piece is quite critical for our going concern risk, and it is being attended to with lenders. In terms of the loans and advances, I've already touched on this around model recalibration and updating our policies to make sure that we account for the book appropriately together with its security. That work has largely been covered. I've spoken about the termination of service level agreements and insourcing the book to make sure that we are in control and on top of it. So therefore, Chairperson, I'm proud to say that the team has done a lot to get out of a disclaimer space. So just in summary, we are sitting with a qualified audit outcome. We received that result in December. We have started with the remedial process and will be able to report progress in the next session. The bank is fixing any internal control deficiencies and making sure that overall we are able to account and manage the book appropriately. The majority of the book that was managed externally through intermediaries is being brought in through an in-source program, and that will allow us to exert a little bit more control and less dependency on third parties. And we are committed to making sure that going forward, the event of default is cured, the book is properly and reliably accounted for. And Chairperson, I must thank the team again for working tirelessly to achieve this result. Thank you very much.
Thank you, and thank you very much. We've got, so we'll go to, is it Dion from PIC? Dion, are you there?
Apologies, Chair. Apologies, DG. Yes, I'm here. I'm just getting my people to log in, and then we'll present. If we can do someone else first, please.
Excellent. So with apologies, I'm trying to check who's also here, and I don't see. Erba, I said Jipa. Is Jipa here? Oh, no. Check, maybe can I request, chairs, we are trying to locate Jipa and colleagues from Erba and including Gtac. Is Ronette here? So sorry, Chair, we seem to be a bit disorganized here from the colleagues. But anyway, so maybe I suggest that we, I don't know, Chair, bear with us, you know, Mr. Masonga. Can we maybe interact with the two entities that we've dealt with as I'm trying to locate the other colleagues, because I don't see them online, but though we've got the presentation, I wouldn't know the reasons why they're not here. But, you know, or we can maybe wait for the PIC and take all three, Chair. Your guidance will be appreciated. Thank you.
How long will it take the PIC to share the screen? Because they are ready from the look of things. We have the presentation sent to us, but why they can't connect, I don't understand. Can you check with them, Alan and Tebo, and share the screen while they are trying to get hold of these other entities?
Good day, Chair.
Yes.
Yes, good day, Chair. My name is Sibusiso Ntunja, the acting GM Finance for the PIC. I had some technical glitches, but I can see now I'm logged in. So
we are in a formal meeting, so a man can wear a hat in a formal meeting of the portfolio committee.
My apologies, Chair. My apologies.
Thanks. Can you please share the screen with Alan and Tebo?
Yes, I'm sharing, Chair.
Okay.
May I request, Chair, it says participant is disabled from chairing. May I request if the technical can assist me to allow the sharing rights?
Alan and Tebo, can you share with PIC?
Trying to do that, sir.
Tebogo, we are not succeeding.
I have connected them, so I'm not sure why they are not.
Let me try again, Chair.
Okay.
See if we came okay. Something is coming now, Chair. Look like we are winning. I've shared, Chair. Is it visible on the site?
Yes, it's visible. You can proceed with the presentation.
Okay, thank you, Chair. So, Chair, I will just go to the background slide that indicate and just highlight to the Standing Committee on Finance what corrective action that we've taken at the PIC to address the internal control deficiencies that were identified by the AGSA office for the 2021 year financial year end. Chair, last year at PIC, we've received unqualified audit opinion, but there were a couple of findings that I will take the committee and the chair through and what corrective measures we've put it in place to make sure that as an institution, we deal with those deficiencies in internal controls. Chair, as I've highlighted, AG identified three significant internal control deficiencies. We've worked with the team and the finance team with other departments as some of the findings are coming from those departments to put a control in place for 2022. Chair, the first one that I'm gonna talk to, the Office of Auditor General, Chair, identified that when we prepare annual financial statement, there were a couple of deficiencies in control on our disclosures of the annual financial statement. So we looked at the audit opinion, and we've designed a plan, Chair, to saying how do we ensure that our annual financial statement before our submission in end of May, they address the issue of those disclosure. And we've identified, Chair, that most of this disclosure is because, let alone that we've got a tight deadline to report end of May that give us 2 months to prepare financials and report to the National Treasury. And we used to do the annual financial statement once at the end of the financial year. So what we did this year, Chair, we said, let's do quarterly annual financial statement and semi-annual as a full pack. So this assists us now, Chair, to make sure that these disclosures are get reviewed all the way to the CFO's office so that we can identify any sort of discrepancies before we do the hard close at the financial year end. So that line, Chair, is still in progress. We were working on the December hard year close. That's a 9 months roll forward. we're planning to finalize that so that by the time we close the March, of which is next month, we've already have the pack of December that was looked and thoroughly reviewed so that we eliminate that. Another thing, Chair, is that we use accounting frameworks, the IFRS. Lot of things changes on, you find a lot of changes on IFRS. So we implemented a lot of this refresher training so that if there's any significant changes in particular standard, we do an impact analysis to saying how does that affect the institution, and that apply across not only to the reviewers, Chair, it applies across to all, even the junior staff members, so that they are aware of the new changes in standards, so that when we prepare this annual financial statement, they address those elements on their specific session before it gets to the high level review, Chair. And yeah, I think those are the two critical things. We've completed a lot of refresher training, Chair, and we normally implement a detailed IFRS checklist that makes sure that we are aligned with that accounting framework, Chair. And the second one, Chair, that was identified by the Office of Auditor General was relating to the due diligence for the PEPs. Those are political exposed persons. Chair, just to summarize that finding for you and the committee, this was mainly due to the misalignment between the PIC PEP policy and the FICA risk management and compliance program guideline. So the PIC PEP policy requires that the EDD needed to be performed for all PEPs identified, whereas the guideline required that can only be done if you identify it as a high risk. But that we've already revised the actual policy, Chair, to make sure that those two requirements from the policy side and the guideline and the FICA risk are aligned, so that when the AG comes and audit, they are auditing the policy that is aligned to the guideline, so that we don't have those differences between the two documents. So we are waiting for that to go through to board for approval, Chair, so that when they start the audit for 2022, we already have the approved policy. Chair, the last one related to irregular expenditure. AG office, yes, they highlighted that there were no strong preventative controls in place to prevent the irregular expenditure. But just to give a background, Chair, if you remember, the irregular that were disclosed by the PIC, some relate to the old contract before the condonment. We only disclose those as those opening balances, but AG still emphasized that we need to make sure that we put more preventative control to make sure that we identify or we prevent any new irregular expenditure. So, Chair, we've worked with the procurement team to make sure that we close any gap when it comes to training for this financial year. And then we will apply to the National Treasury for the opening balances that were not condoned to make sure that we communicate with the shareholder to supply evidence so that they can attend and approve those condonment. But yeah, Chair, our target this year, we're working to make sure that those three significant deficiencies that were identified by the AG offices are addressed. And I think, Chair, from my perspective, we are in a very good standing to make sure that we work toward getting a clean audit for 2022. Chair, I think that's my presentation from the PIC side. I will take any question from you, Chair, and the committee members.
Thank you, Chair. Thank you very much. Then followed is Shahid from GPA, who's the acting CEO there, Chair. Shahid, are you there?
DG Shahid says he's struggling to log in. I have asked the Secretariat to let him in.
Are you there, Ermi?
Good morning. Yes, sorry, there was a bit of a disruption. Is it for the IRBA?
Yes.
Okay.
Sorry, I'm in. Shahid Khan here from the GPA.
No, Shahid, let Erba go. You'll come next. Thank you.
Okay, thank you, Dondo.
Chair, we prepared a presentation. Should I project?
Can the Secretariat give him access to projecting the presentation, please? Okay, we can see that. Emre, carry on, please.
Thank you, Chair. Basically, we prepared a short presentation based on the documents that we received from the committee, focusing on remedial action and plans going forward to address the non-compliance issue that was raised by the Auditor General. My presentation isn't long, Chair, but there's two parts to it. First of all, a reflection on the annual report and the audit outcomes, in particular, the irregular expenditure that was disclosed in the 2021 financial statements, as well as some governance feedback that was also mentioned in the analysis of the committee. And then, Chair, I just have a few slides on other strategic highlights in terms of the IRBA's 5-year strategy. So on the annual report, Chair, the annual report, some of the key audit outcomes and context is that the IRBA has received an unqualified audit report for 11 consecutive years. This is on the financial statements itself. The report for 2021 was unmodified. It was an unqualified, unmodified audit report on the financial statements. There was also no material findings on the predetermined objectives based on the selection and audit work done by the Auditor General. However, Chair, there was, as you are aware, and the committee is aware, there was a finding on compliance with laws and regulation, in particular with regards to irregular expenditure and expense management. Chair, we first disclosed irregular expenditure in the 2020 financial year. As you can see there, this is an extract from our financial statements. And there was an amount of 335,000, which is way below our materiality threshold for the IRBA. But the Auditor General highlighted these irregular expenditure for that year, and it was included in the audit report or in the annual financial statements disclosures for that year. During the current year, Chair and committee, you will see that the 335,000 carried over, but then the RBA went back looking at the outcome of the audit and learning from the audit. We went back to 2014 to look at all single source expenditure for specialist investigators, mainly specialist investigators of auditors that conduct with misconduct around audits and auditors. But we went back to 2014 to identify, firstly, in the current year, there was 1.9 million, And since 2014, there was an amount of 8.4 million. Just the context behind this is very important. So yes, the Auditor General did raise the non-compliance in 2020. However, we as the RBA, we reviewed the financials from 2014 and we self-declared an amount of around 11 million arising from similar procurement practices, and we disclosed the full amount in the 2021 financial statements. And based on that disclosure, the Auditor General made their determination, because this amount is now material, they made the determination that there is a non-compliance. The context that I mentioned that is important is that the irregular expenditure relates mostly to the procurement of specialist investigators for high-profile audit matters, in which it had historically proven difficult to obtain 3 quotations due to the scarcity of independent experts, as well as the fact that the skill sets of those individuals is highly specialized. Chair, if I can use an example, for example, if we inspect the audit failure of a bank, I'm not going to mention names now, but when we investigated a big bank that failed, and we inspected and investigated the auditor's role in that, what is important that for the RBA is to get a specialist auditor that has all the banking expertise. So, Chair, yes, for a number of years, we've procured specialist investigator services through single source motivation, and there were no findings raised from the AG for all those years until 2020, when the Auditor General did raise the issue of irregular expenditure pertaining to single source procurement, which directly related, Chair, and I think this is the crux of this. It is directly related to the interpretation and implementation of a National Treasury Instruction Note 3 of 2016-2017, which requires that either if a single source above a certain amount needs to follow a due procurement process, and alternatively the Treasury can be or should be approached for prior approval of deviation. So, Chair, just some feedback around how the board handled this. Since early 2021, last year, the RBA board and myself, who was then appointed as acting CEO in February last year, we've investigated the matter. The outcome was that there was no fraud, corruption, or any criminal conduct, and there was no material loss to the RBA identified. And the board eventually approved the removal of the irregular expenditure in 2021 and 2022, which in terms of paragraph 44 of the framework will be disclosed. But the removal of the previous irregular expenditure will be disclosed in the next financial statements. Going forward, the RBA will not use single source procurement, but will instead appoint a panel of various experts on which to draw for specialized investigations. Where a high-profile investigation matter requires a specific expert investigator skill set, the RBA will apply to National Treasury in advance for such deviation. And I'm happy to note, Chair, that one such deviation on a high-profile investigation matter has already been granted by National Treasury. The RBA has been prudent in declaring and disclosing possible irregular expenditure and has implemented the necessary controls to mitigate possible future irregular expenditure. The former CEO, the former CEOs, and the former Director Operations, which fulfills the role of CFO, have also since left the employ of the RBA, and new and additional staff were appointed to strengthen the supply chain management unit. Chair, that's on the irregular expenditure, the one finding that was raised by the Auditor General. There was also mentioned in the report the committee's analysis around governance. Maybe just to share one slide on that. So Minister Mboweni dissolved the RBA Board of Directors in January last year, and Minister appointed a caretaker board for a period of 3 months, which is in terms of our Act, the Audit Profession Act. And their term was limited to 3 months per the Act. It wasn't possible to extend. At that time, the new CEO at the time left the RBA after 7 months. The caretaker board then appointed an acting CEO in February, and the minister appointed a new board in June last year. And that same board has now been with the RBA and driven the strategy of the RBA since June last year. And they approved a refocused 5-year strategy that was tabled in Parliament. And I think something that's also noteworthy from a governance perspective is that the President Ramaphosa signed into law the Auditing Profession Amendment Act in April 2021, which significantly strengthens the governance, the independence, and the enforcement powers of the RBA. For example, the upper limit of fines that firms can be sanctioned with, the upper limit has now been removed by the new Act, and the upper limit can now be set by the minister. Chair, also noteworthy during last year, despite the governance changes and now having a stable and competent board at the RBA, we belong to a body called the International Forum of Independent Audit Regulators, comprising independent regulators from 54 countries. And I'm happy to say that in early last year, the IFIA appointed the RBA as a board member and a chairperson of its Audit and Finance Committee for another 2-year term. Currently, Chair, from a governance perspective, the board is actively recruiting for a new CEO. Chair, then moving on to some other strategic highlights, just very briefly, the role of auditors. We as a regulator understand our role as a regulator, but also the role of auditors that we regulate to promote the integrity of financial reporting, and for that to build a basis for providing public confidence and providing confidence in our financial system. And the role of auditors is to reduce financing costs and contribute to the efficiency of capital markets, thereby promoting economic growth. In essence, we fully understand the role that the auditors play in when they issue an opinion on financial statements. Investors, local and foreign investors, have to rely on that financial information in order to make investment decisions. And the more trust that can be placed in the financial reporting ecosystem and the reports that are issued by directors and those charged with governance and then audited by the auditors, the more trust is built in this ecosystem, the more inclined investors will be to invest their money, because they can trust the figures that are produced to them for investment purposes. And Chair, as a regulator, we understand our mandate, we understand our updated mandate in terms of the new Act in creating an ethical, value-driven financial sector that encourages investment, confidence, and protects the financial interests of the public. Mostly the investing public and those of us with pension funds that are invested in, for example, listed companies. Chair, the board last year adopted a refocused 5-year strategy. Upon their appointment, it started with a caretaker board, and then also the new board seriously looked at the strategy of the RBA. we updated our regulatory strategy, which was signed off by the minister and is on our website. But I think I would highlight just the three strategic focus areas from our refocus strategy. Firstly is audit quality. The quality of the audits is of utmost importance to drive these values and the trust in the system that I just mentioned. We are also focusing on the sustainability and the relevance of the auditing profession, bearing in mind that our mandate only covers auditors and not accountants. For example, chartered accountants or accountants that are in the private sector acting as CFOs, finance directors. If they're not registered with the RBA, we have no jurisdiction over them. We've also then recognized that it's important for us to engage comprehensively with our stakeholders that have jurisdiction and authority over those accountants that are not under our radar. But it's important that we engage with all stakeholders in the ecosystem to ensure that the weaknesses and the gaps that are there are firstly identified and then measures then identified and recommended for implementation to strengthen the entire ecosystem. Chair, I'm closing with the last slide, just highlighting one of the questions might be, but how are you going to do this? What mechanism are you implementing to restore confidence in the auditing profession? So the board and management has developed a Restoring Confidence project called Restoring Confidence 2.0, which is now strategy backed because it's now in our 5-year strategy. And it looks at 3 areas, as I mentioned, the financial reporting and governance ecosystem, because there are gaps that we are aware of in governance, in management, accountability of those individuals at the companies that actually took the decisions to produce incorrect financial information. And then the auditors came in later on in that process to do the audit on those already flawed financial statements. And that is just a recipe that we and a risk that we as the IRBA recognized as a recipe for risk that can result in business failure, audit failure, and diminishing the trust of investors in our companies. We've also recognized as an international affiliated regulator that there are constant reforms that are necessary within our mandate, within the auditing sphere, and we are constantly putting out new ideas, new reforms and new rules that will prevent and hopefully curb auditors acting or misconducting themselves in the execution of an audit. And then lastly, Chair, we've also recognized that the RBA, we ourselves need to remain capacitated. We need to maintain our professional capacity and experience through our staff, who is our greatest asset. And we also need to invest in our platforms and people, as well as technology, to make sure that we are a future fit regulator that effectively and efficiently regulate the auditing profession in the country. Chair, we've identified 3 work streams under the leadership of the executive management, and we report quarterly to the board in terms of this project. And we've already made a lot of progress on a number of these projects to strengthen, for example, the transparency and the content of the auditor's report for the benefit of investors and those that are interested in the audit outcomes of a company's financial statements. So, Chair, thank you. I will stop there and stop sharing, and I'm happy to take any questions from the committee.
Thank you, Emre. Chair, with your permission, we'll ask Shahid Khan from Gtac to come in as acting CEO of Gtac. Shahid.
Good morning, members of the Standing Committee on Finance.
Shahid, your sound is bad.
Is the sound bad?
It looks like two computers locked in your office there somewhere.
Is it better?
Yes, it is better. Yes.
I'd just like to thank the Standing Committee on Finance for inviting us to this meeting. Apologies for the fact that I don't have a tie. We had a strategic session, which I informed the Director General of. We have read the announcement, the ATC report that was shared with us by the Secretariat of the National Treasury, and our presentation will focus on the highlights as contained in the Auditor General's report and the report, the presentation by the Auditor General with regards to the GPA. Let me have an opportunity just to streamline and present the presentation. Is it visible on the screen?
Not yet. Yes, Shahid is showing now.
Can I proceed?
Yes, put it on presentation mode, yes.
Okay, thank you. So let's move to slide 1 of the presentation, which is the overall outcome of GPA remains unchanged from an unqualified audit finding that was achieved in the previous years and in fact in the last 10 years. The GPA has prepared annual financial reports that are useful and reliable, as no material findings were identified relating to the annual performance report. In fact, the Auditor General commended the GPA on on implementing the recommendations and the action plans with regards to performance. However, the story is not as rosy as that. We face compliance and regulatory challenges within the organization, and that was identified by the Auditor General. These contraventions relate to procurement, management, contract management, expenditure management, and consequence management. So let us deal with the findings that were identified. And the one finding that the Auditor General identified, that the contract was awarded to bidders based on preference points that were not allocated and calculated in accordance with requirements of the Preferential Procurement Policy Framework Act. Internally, within our checks and balances within the institution, the GPA identified this as a challenge, and we immediately raised an irregularity of 2.4 million, which we then reported to the Auditor General. The second major finding was sufficient and appropriate audit evidence could not be obtained that one contract was awarded to bidders based on points given for criteria that were stipulated in the original invitation for bidding. This was a result of the advertised evaluation criteria that was not clear and specific. In some instances, the Auditor General was unable to verify the outcome that were reached at the due diligence phase of the bid evaluation. We had a very thorough discussion with the Auditor General where we did not quite agree with the audit finding, and between ourselves and the Auditor General, we agreed not to classify this as irregular as per the Auditor General recommendation, but that the GPA would undertake an investigation to ascertain whether there was any irregular expenditure in awarding of the contract. I am pleased to advise this committee, the SCOF committee, that in fact an independent legal team was approached through our procurement section to underdo this investigation. We shared the terms of reference of the investigation with the Auditor General, and we asked the legal firm to interview the Auditor General so as to appreciate their concerns, and I'm told that report will be made available at the end of February in line with the agreement with the Auditor General. With regards to consequence management, the AG was unable to obtain sufficient appropriate audit evidence that disciplinary steps were taken against officials who had incurred irregular expenditure. This was a result of recommendations included in investigation reports. I wish to share with the SCOF committee the actions that have been taken by the GPA since the audit. A loss committee was established in terms of the framework in the PFMA that deals with irregular expenditure, and that all reports currently where irregular expenditure has been incurred has served before the loss committee. The irregular expenditure, what we have found, and I wish to state this unequivocally, that the irregular expenditure that was presented to the loss committee through the investigations have found that there was no criminality or loss to the fund and the GPA, but that there was value for money in spending the expenditure incurred. It was a matter of certain prescripts that were not followed in full that resulted in these irregularities. The controls were put in place to avoid recurrence of this irregular expenditure in order to ensure that it can either be removed or condoned. And staff members that were found to be in the wrong by the investigative reports were given appropriate sanctions, including written warnings, which would stay on their files for at least 6 months in terms of the required public service regulations. Let's move on to the next slide. I wish to indicate to you that effective and appropriate steps were taken to prevent irregular expenditure to the amount of 22,732,000, as disclosed in Note 9 of our annual financial statements. And here's the progress to date. Closing balances of irregular expenditure as at 31 March 2021 was around 73.872 million. 16 million has been removed from irregular expenditure in line with the Public Finance Management Act regulations since the audit. 12,343 million has been sent for investigation, and reports are expected to be finalized by the end of February. 7.604 million has been sent to the National Treasury Chief Procurement Office for condonement, and 37 million investigations and consequent management are in progress. And of that 37 million, there are 2 tenders that we're dealing with. One is with regards to a printing tender, and the other is regard to a security tender. Okay. During the audit of the AG, identified and reported instances where payments were not made within the 30 days as stipulated in the criterion of the PFMA, and management is thus regarded to implement corrective measures. I wish to assure the SCOF committee that business units are engaged every month for invoices that could be pending on the units, and invoice payments delayed have been placed on the cost center manager's performance contract in order to ensure compliance. The Auditor General also identified that a number of key management positions are vacant. The instability in key management positions is reflected by the number of executives and senior managers acting in positions for a period exceeding 12 months. This adversely impacts on government component strategic direction. I wish to assure the SCOF committee that the executive positions, that is of the Chief Executive Officer, the Chief Operating Officer, the Chief Financial Officer, and the Head of Corporate Services, which are at DDG level, has been advertised in 2021 calendar year, and a short list and necessary information has been provided and awaiting interviews, and the Minister has committed himself to ensuring that these positions are filled expeditiously. I also wish to advise the committee that key vacancies such as the Chief Risk Officer, the General Manager for Support Services at Chief Director levels were filled during the financial year. Together, I'm talking about the financial year under review, together with the Chief Audit Executive. So the Chief Audit Executive has also prioritized the filling of key vacancies within the internal audit unit as identified in the Auditor General's report to SCOF and the actions taken by the GPA. So we are also open to questions. Thank you.
Thank you very much, Jade. Ronette, she's the acting head of GPA. Ronette Engela, please come through.
Good morning, everybody, and good morning, members of the committee. I need to share the presentation. I'm just not so 100% familiar with, okay, start the video. Here's my video and share the screen on the presentation. There we are. Good morning and thank you. I'm a very recent acting head, past 3 days. But let me present the picture that we have from the Gtac site. Thank you, DG, and good morning to the members of the committee, honourable members of parliament. The overall audit outcomes for Gtac has taken a turn for the better. I assume my screen is visible to everybody. I'm going to just make that small so people can see this. The audit outcomes. Can see that. Thank you. Thank you. The audit outcomes for Gtac for the 2020-21 financial year was an unqualified audit with findings. It was the same as the previous year, unqualified with findings. There was a marked improvement in terms of irregular expenditure. There were no material misstatements on the submitted annual financial statements. And indeed, the marked improvement on the irregular expenditure went from 8.2 to 1.4 million. And I can talk about that, and I can talk about much more details if the committee would like to ask those questions. Most of its strategic objectives Gtac was able to achieve, which is also a marked improvement from the prior year. The main findings were in 2 areas. There was a concern around the usefulness and reliability of one reported performance information. It was felt by the AG that it did not adhere to the SMART criteria. It was around the word supported. And okay, let me just stay to the high level. And then there was another finding on non-compliance with supply chain legislation around that resulted in irregular expenditure of 1.4. I need to mention that some of that is, for instance, international licenses for Zoom and Stata, for which we could not get tax certificates, but nonetheless, the key root causes are that there's a lack of monitoring around the usefulness and the reliability of performance information. It was also a matter of the timing of the publication. We could not change it in the APP and changed it in the business processes, but that was not deemed adequate by the. So that's the lack of strict monitoring and usefulness of the reliable performance information. That there were insufficient preventable controls to ensure compliance with the SCM legislation, and that the accounting officer's position is vacant and is an ongoing acting capacity. But I think there's further discussions around that, perhaps at some other point. What are the actions that we implemented? That the audit action plans were reviewed by the internal audit as well as the audit committee to address these root causes, and preventable controls have now been put in place, and compliance have been strengthened, as well as some supply chain training has improved. There's a turnaround plan in the supply chain section within Gtac. A policy and quite strong standard operating procedures were put in place to ensure that performance indicators are well defined. There was also consultation with the Department of Performance Monitoring and Evaluation, as well as the internal audit for the new APP, in which the renewed stuff now could be placed. There will be some disciplinary steps that have to be taken. There has been a recommendation of disciplinary steps. If I go through the nature of these irregular expenditure, I think people will understand that the reason to submit a request to the OCPO to condone this, and the normal management processes will be followed thereafter. So this is my very short and sweet understanding of the processes at the moment honourable members, I'm open for questions, of course, or DG under your guidance. I'm trying to open this up so I can get out. Let me not share. No, that's not what we want to do. Colleagues, I'm a bit stuck here. I don't seem to be able, I can see Shahid. Let me do this. Am I? There we are. Let me mute myself and listen to the questions. Thank you.
Thank you very much, Ronette. Let's go to the last one. It's on our screen. So we're going to CBDA, and I'll ask Lorna to come through and make a presentation. Lorna, are you there?
Yes, I am. Good morning, members of the Standing Committee and all attendees. My name is Lorna Pajachi. I'm the Deputy Director Financial Management. Unfortunately, we are currently without an acting MD. I'm going to share our presentation right now. Could you just acknowledge that you can see my presentation?
Yes, we can see that. Thank you.
Okay, so basically CBDA, in terms of our audit outcomes, for the past 3 years, there has been some inconsistencies. In the 2019-20 year, we had a qualification, and this qualification came about due to the fruitless, wasteful, and irregular expenditure that we have incurred in that year. And in the current year, the 2021 year, there has been an improvement where we had an unqualified audit opinion and a reduction in our findings. Some of the matters we had to do prior year corrections relating to 2020 year. And this again resulted in terms of the 2 investigations we had on frivolous and wasteful and irregular expenditure. Here, the Auditor General found that CBDA couldn't identify the split between the amounts relating to fruitless and wasteful. Even though the investigation took place, it couldn't concretely determine which amount. So we engaged with the OAG, and then we have resolved that matter. In terms of the fruitless and wasteful expenditure for the year, for the entire amount, in terms of our financial statements, we had 5,447 million. 9,891,000 for irregular expenditure. The main areas that the AG picked up in our 2021 financials was expenditure management, some supply chain management, and the key area was consequence management and the material misstatements that related to the prior year findings, which impacted the 2021 year. The CBDA also in terms of performance information, we had one finding relating to the usefulness and reliability of our performance information. As management, we basically had to take some action plan and implement some plans. So what we've done is that we had to review all our processes and strengthen our controls. As CBDA, we're a small entity and we do not have all the skills and capacity that we require relating to the compliance matters. So we had to build relationships, closer relationships with the Treasury SCM and the Chief Procurement Office, and also learn and capacitate ourselves so that these findings that we get, we are well aware of it instead of when the AG comes out. Again, we started looking at employment of new staff, but obviously looking at the process that's going to unfold now with CBD going to merge with other entities, this process has been put on hold. Then we also to strengthen, to make sure our financials are we do not incur the misstatements. We've got internal audit to review our interim financials, also to look at our internal controls in SCM. And also we're looking at getting an external consultant to review our financials. The next area, what we have realized is the causes and the deficiencies that we identified is the capacity constraints that we have. As a small entity, we basically do not have, due to the governance compliance issues, which takes up a lot of resources, the corporate services is only made up of about 5 personnel. And our main aim is to make sure our core area, which is capacity building for the CFI sector, has enough resources to make sure that they can meet our mandate as CBDA. So some of these things are then cause these causes and the deficiencies related to segregation of duties, especially relating to the review of the financial statements, where you have one person preparing, but you cannot have someone. So these are the controls that the action plans we mentioned previously to assist with that areas. Also, we have the lack of the inconsistency of leadership. It's over 2 years now. We have been having acting appointments as for our managing director. This has also impacted on the work we are doing, and also making sure that we keep within the mandate. Also, in terms of governance as well, we also have where we do have delays in appointment of our board members, which also impact the CBDA. Also, we have the ineffective monitoring of our controls. And then I think the key area is the consequence management, which I alluded to previously, relating to the fruitless, wasteful, and irregular expenditure. Without an acting MD, currently a lot of these matters are put on hold. Although the plenary steps have not been taken yet, the process is still continuing and it's still a bit slow. So it's crucial for CBDA to make sure that we have a head leader so that we can then take these matters forward. So that's my presentation. Thank you.
Thank you very much, Lorna. Deputy Minister, that's where we end. And Chair, thank you. We will be more than willing to take questions. Thank you.
Thanks, DG. Thanks, Chairperson, the Standing Committee. That's our case. That's our account on how we are implementing some of the recommendations or the action plans as guided by the findings of the AG. Over to you, Chair.
Okay, thanks, Deputy Minister, DG, and heads of entity. Let's move to item 4. Questions for clarity and comments by honorable members. Alan and Theo, you'll assist me. Today, my gadget has got issues with the visual. So my son assisted me to use whatever he called it through the internet. So I'm not used to the app that he has downloaded for me. But it looks like I can see Honorable Mawile, Honorable George. Who else is in the platform, Theo? Murolo. Let me note members, Mawile, George, Dr. George, Honorable Murolo. Who else?
Mr. Kosana and Ms. Abram.
Yeah, my gadget today has got issues. Kosana, Honorable Abram, 1, 2, 3, 4, 5. Yeah. Over to you, Honorable Mawile.
Thank you, Chair. Chair, I just want to start by congratulating all the entities that got unqualified audit outcomes, and then also to urge them to continue to fix those matters. And I just want to comment today on the land bank. You know, land bank, even though you are saying on the negative outcome or outcome that you got, and you say, you know, it is only those one matter. You know, a negative outcome, a qualified is a qualified. And this is how it's going to describe you as the land bank. And my worry also is, you know, you also have a unit that is just there to chase for those bank statements, you know, and then how long have they been chasing for those bank statements? And my other worry is, if you cannot submit the bank statements or report, have you done the work? Have you reached your mandate? I think maybe you must just continue, you know, and look at the other matter. And to all the other entities, you know, sometimes we might have make sure that our books looks good because we've got an unqualified, a good audit outcome, and forget our mandate. Because even though we've got all those books that are looking good, have we, what is our mandate is? Are people there doing what they are supposed to be doing? And finally, I just want to say, for all the positions that are supposed to be filled in, please continue and do so, because they will also affect the mandate of your entity, so that you do not achieve what you are supposed to achieve. Thank you, Chair.
Thanks, Honorable Mabelete. Dr. George.
Thank you very much, Chairperson. As you know, I have been in Parliament for quite a long time, and I did spend a little bit of time, about 2 years, in SCOPA as well. And one of the things that struck me very much on SCOPA was that we saw the same thing happening over and over again, same issues coming up, and then they never seemed to get resolved. And then the people responsible were just moving around the government services. So, I mean, that's been a concern of mine from a systemic perspective for a very long time. And that is something from a macro perspective that needs to be looked at. And I believe that that lies very firmly in the domain of the National Treasury, who are responsible for the proper management of the people's money. So from a macro perspective, certainly my expectation, and I'm sure the expectation of every other hardworking South African, is that we will have Treasury's eye very firmly on all of the entities that are spending the people's money to make sure that they spend it well and don't waste it. So that really is my appeal to the Treasury, because I do not believe that they have been as effective in that as they could have been. I know it's a very difficult task to achieve, but I do believe that's where the buck has to stop. Just a couple of things on the entities in particular. On the land bank, I think we've heard this all before, and that the key issue with the bank was that they did not manage their loan book properly. So there were dodgy loans, they never got paid back, or problematic loans never got paid back, lack of management, lack of controls, etc. But it doesn't help to dwell on the past. We must look forward. I do think in this particular instance, if you look at this land bank, I do not think the Treasury has been on the button on this. We've heard over and over again things that were wrong, things that we turned around, and then we never got there. So I do want to hear from the Treasury is, how is that cycle broken? Because I'm not so sure that it is. And we can't have this continue to go on and on. Then on the PIC, I mean, there were a number of issues raised. I mean, we do know there was a bit of noise about the PIC, but I won't go into that. But they said one of the items were in particular that management did not implement effective financial systems for internal controls to ensure accurate disclosure notes to the financial statements. Now, I mean, that is a very serious problem. You know, if you're going to do a set of financials, you're going to have to explain certain things and you're going to have notes on them. Now, if there's no records or not sufficient records to be able to put a coherent statement together, I mean, that speaks very huge volumes to, you know, to your ability to actually manage the organization. And given that it invests other people's money, in particular government employees and government's money, the people's money, you know, one would expect a very high standard. So I want to know from the PIC, now it was said management did not implement effective controls. What is going to happen to that management? Is there in fact consequence management in the form of disciplinary action or dismissal, etc.? Because if that does not happen, then I don't think you get anywhere actually. And then for IRBA, I think we've heard some previously, you know, some issues that have arisen there. And of course, given that IRBA is to set the standard, etc., it's supposed to be leading the charge, as it were. You know, the difficulties that you have experienced and indicate, I mean, does that impact negatively on your credibility and therefore your ability to hold others to account? Because, I mean, it is clear, if I'm saying to somebody, well, you know, I'm setting a standard and I expect you to behave in a certain way, but then in my own house, it's not in order, then, you know, what is people's view? Like, you know, they look at you and think, well, who are you to tell me what to do? So I'm just concerned that that sort of culture then starts to break down systems, etc. So I would like to comment on whether that is a problem. And then with JPAR, yeah, I think, I mean, the DG would know this very well. I have raised a number of problems over the past couple of weeks, actually, because the noise coming out of JPAR is enormous. The number of people complaining about service failure, long outstanding things, not being able to get hold of the call center, etc. The service appears to be deteriorating quite badly. And the reason why I raise it, and I've raised it before, is because, I mean, I don't go looking for people to give me, you know, issues with the JPAR to sort out. I mean, you know, no MPs do that. We have got lots to do in terms of our duties in Parliament and etc. to the community. So when people actually search for you, find you, so that you can help them with a problem of their pension, you know, for example, their spouse died and now they are starving because they're not getting their money and the pieces of paper are moving from pillar to post, you know, that tells you something, that there is a very serious problem when it is now bubbling upwards. So, but to the credit of the DG, some of the issues I've raised have been taken on to get resolved, etc. So we are getting somewhere, but it does leave me with a very troubled feeling that if that is happening, so if on the surface, the service appears to be deteriorating rapidly, what does it mean then for financial management? So I think I know that I've taken a slight detour here, but I think it's important because problems in service, etc., show up in the finances because it tells you there's something wrong with the management. So I want to know from JPAR that, you know, what is going on there? How do we know that those issues are getting sorted out, because else they're going to show up in the financials before long. So that is quite a big serious thing in my view. And then finally on Gtac, I was pleased actually to hear that disciplinary steps will be taken. Obviously we never really know what what the details are, but I think that's been the biggest problem of all, is that there hasn't been proper consequence management for anybody. And that what I saw in Scopa is that people would do something egregiously bad somewhere and then pop up in another entity. So I do want to know, actually, no, I don't want to know what the detail of the disciplinary action is, but I want to just appeal to all of the entities that where there are these problems that arise, disciplinary action must in fact be taken. In my view, I asked the Minister in the House on a question, how many people have been jailed for stealing the people's money or for being or having done egregious things to the people's money? And the answer is probably none. So that is a serious problem in terms of consequence management. So I'm pleased to hear Gtac is taking disciplinary action, and I would expect that the other entities did too. Thanks, Chair.
Thanks, Dr. Church. Honorable Mrolong, over to you.
Well, good morning to you, Chair. Good morning to members on the platform and to our colleagues from Treasury. You know, Chair, the National Treasury is expected to manage fiscal resources efficiently. And we expect entities that fall under Treasury to set the tone when it comes to sound financial governance practices. We are encouraged by the action plans which have been flagged here, which are aimed at remedying internal control deficiencies and to respond to all other findings. We are, of course, worried about, and I share the same sentiment with Honorable Mabileza on the land bank. It is for this reason that I want to ask a number of questions, and they are not necessarily limited to the land bank, but they are generally questions about these entities that fall under Treasury. Have we ensured, Chair, that we have within these entities fit and proper persons who are properly assessed and vetted, who are part of the board of directors and executives? Has Treasury signed shareholder compacts with each of these entities, and that have we ensured that the performance in terms of this shareholder compact is assessed on a quarterly basis? Has Treasury considered appointing shareholder representatives to this board of directors? Finally, Chair, I want to say that there should be clear consequence management for non-performance, as well as non-compliance with laws and regulations. Thank you very much.
Thanks, Honorable Mrolong. Honorable Hlonishwa Skhosana.
And greetings to yourselves, the Deputy Minister and honorable members, the Treasury team led by the DG and its entities. Honorable, when I look at the action plans from the National Treasury and from the PIC, I think they are quite encouraging. I think, like Orulung has indicated, and we really welcome them, and we hope and believe that they will, I think, assist in turning the situation around and producing an improved audit opinions moving forward. And I think as a committee, we will keep on monitoring that to ensure that an action plan does not only become an action plan on paper, but it becomes a real action plan where there are actions that are taken in order to remedy the situation. Coming to the World Bank, I think we welcome the improvement on their audit opinion from the disclaimer to a qualified audit opinion. Although that is not enough, we need a clean audit, or at least an unqualified opinion with findings, especially from the entities of the National Treasury, because National Treasury it's known to be the department that deals with issues that are related to good governance, financial management, and all that. So we were expecting a clean audit, or at least an unqualified with matters, but not a qualification. And I've heard the justification that the reason that they did not get an unqualified is because of a certain individual who did not submit documents and stuff like that, which also Honorable I think should have mechanisms to deal with such situations. Because if you don't have a mechanism to deal with such situation, it means in future you may also get an unfavorable audit opinion because of certain individuals, whether they are stakeholders or what, who are not cooperating. So I think it is your responsibility to have mechanisms in place to deal with stakeholders or individuals who are not cooperating in terms of submitting documents, especially during the time of audit. So you need to really deal with that, because it will be unacceptable for us to give us a justification to say, no, in actual fact, we were supposed to get an unqualified, but because of this one individual or because of this one stakeholder, it is the reason we did not receive an unqualified. I think it's quite unacceptable to us. So I believe that you will look at that land bank and correct it. Coming to IRPA, yeah, I see they've indicated that they've been getting unqualified audit opinion for the 11 consecutive years, which is very good, though they did not indicate as to how many of those unqualified audit opinions are without findings. I'm interested to know as to how many of the 11 are without findings. But I think that's good that we have been getting the unqualified audit opinions for 11 years. But another matter, I think the report on issues of governance, it indicates that the minister dissolved the IRPA board in January 2021 and subsequently appointed a caretaker board for 3 months. Then the new CEO, who was only 7 months in office, left the office. So I'm interested to know as to what could have been the reason for the CEO, who was just 7 months in office, to leave. If perhaps they do know the reasons why the CEO, who was only was only 7 months in office, why he or she decided to leave, because I think that was at an important period of stabilizing the institution, putting a caretaker board, and the board approved a 5-year refocus strategy. But in the middle, during that particular process, then the CEO, then left the office. I'm interested to know as to whether what could have been the reason, if they know the reasons for that. Thanks, Chair.
Thanks, Mhlonishwa. Patricia Abraham.
Thank you, Chair. Thank you so much. Hey, Chair, why am I in parties one now? Thank you so much, Chairperson. I recognize the Deputy Minister at the helm of the National Treasury, and I also recognize the Director General of the department. And good morning to honorable members and members of the National Treasury, as well as the entities. Chairman, let me start off by saying it's really pleasing to pick up from National Treasury, as well as the the other entities attached to Treasury that they have been upbeat and positive about the findings from the Auditor General of South Africa. I think that's a very good start because it gives you mileage in terms of correcting what you are doing wrong rather than being in denial and defensive. I think in terms of the report that we have received so far, Chair, we have had a lot of improvements in terms of what is being done to turn around the situation in some areas where it has not been so good. But I find, Chair, that, for example, most of the findings were around the weaknesses around internal controls in most entities. I do want to ask why that has been the situation. I see now that that is being addressed, but you can also see if from the first presenter, Laura was saying a particular percentage has not been addressed in terms of remedial exercise. Now, one is interested to know why is that? Why are we not at 100% in addressing the issues? I heard that the DG speaks to issues of employment, for example. Do we still have a high vacancy rate in the National Treasury as well as the entities? Chair, it would also be beneficial for the committee if the Ages Office was represented here so that we can be able to confirm the progress on the implementation of plans. I know that we can trust National Treasury that the plans are there, but in terms of implementation, is there anybody from AGSA who is able to confirm that the implementation is in place? Chair, just a second last question for me to IRBA. It would be interesting for the committee to know the names of the companies that are being made single source suppliers on investigations, because I think, Chair, we will all agree that the area of forensic investigation is not a scarce skill in our country. So that kind of openness will be appreciated. Lastly, Chair, I see that FFC is not part of the entities that are here present and making presentations, as well as CBDA. If National Treasury, maybe DG could share with us the reasons thereof. It could be that they're performing very well and therefore there was no need for them to come here. We'd like to know, as the committee. Thank you so much, Chair.
Thank you. CBDA has presented, Nox. It's only FFC which is not here.
Thank you, Chair. Thank you, Chair.
Dr. George, is it a legacy hand or is it a new hand?
No, Chair, it's not a legacy. I did want to actually have one last question. I missed it when I actually asked them, and that's about the liability solution of the land bank. It was mentioned in the presentation that there is a liability solution I would actually like to get more detail on that because it isn't clear to me what that actually is. Thanks, Chair.
Thanks, Dr. George. I will allow the Deputy Minister to lead the DG and then the heads of entity. We'll also allow the Auditor General to make comments or observations because they are part of making sure that we play an effective oversight role as Parliament. So we work very closely with them. Deputy Minister, DG, heads of entity, then Auditor General, then we take the second round of questions and comments.
Chair, may I allow the DG to go first together with the entities, and I'll come at the end, if it's okay with you? DG, over to you.
Thank you very much, Chair, and thank you very much, Deputy Minister. Chair, just maybe to upfront, maybe respond to the FFC. The FFC it's a separate entity completely, and its accountability structures are direct to Parliament. It's got a relationship with Parliament. It's a parliamentary institution established by as such, and not necessarily through us. So that's something that's clear. But we you know, what I've done, DM, is to maybe ask just in terms of land bank, before even the CEO comes in there, ask Duncan, who oversees land bank from the assets and liability management side of the Treasury, to just maybe give a brief indication to the committee as to what is that we are doing at land bank to stabilize it, and understanding that obviously land bank comes a long way and its challenges outlined by the CEO. Recently, the committee may be aware that we have established, a new board was appointed the other day with the new chair, new energies there. But maybe Duncan come in and then you can maybe outline and also we'll obviously take some more responses. Duncan.
Thanks, DG. Good morning, honorable members. Just as the DG has indicated, perhaps to give some perspective on the land bank, Chair, and I think as one of the honorable members noted, there has been an improvement in the audit status of the land bank, but we would obviously like to see, along with the board and the executive team, we would like to see further improvements. I think that is clear. What we find comfort in, Chair, is that the new board has, who's overseeing the remedial plan of the land bank, they have certainly taken an active interest in making sure that these audit issues are dealt with. And I think that is something that helps when you have a new board in place and they have prioritized this issue. I think it certainly helps from that perspective, and in particular from the new chair of the Land Bank Board. What we have done in addition, Chair and honorable members, is that we've made sure that the issues around the audit findings for the Land Bank is an area of focus for the board and all the board committees. I think that is something that we've made clear as the shareholder, and we communicate that and hold them accountable through our weekly meetings that we have with the Land Bank, our quarterly reports that we receive from the Land Bank, and to also make sure that, of course, the entity continues to report on these matters to Parliament. So I think from that perspective, Chair and honourable members, we find comfort in the emphasis that the new board has placed on this issue, including the new chair, and we continue to hold them accountable to that through our very regular interactions. There has also been a question around the liability solution. And essentially, in a nutshell, honourable members, what the liability solution is a solution that is being negotiated between the Land Bank and the local and international lenders that are invested in the entity. The entity has found itself in a position of default, and the liability solution is what is being negotiated in order to, number one, cure the entity of its default position, and number two, start the way forward for a new and sustainable land bank. So that really is what the liability solution is there for. DJ, I hope I've covered the issues. You'll ask me to come in again if necessary. Thank you, honorable members and chair.
Thank you, Professor Peter, sir. Thank you very much. Maybe just another point. Generally, Laura will come in on the vacancies. Dr. George is right, and again, Shahid, you obviously put more color to the issues. Dr. George is right in that, obviously queries in the last 2 weeks or so, him and I have been exchanging a whole lot of emails around complaints and issues that remain unresolved. And obviously we're trying to actually ensure, but it cannot be the way. It cannot be that some South African out there knows Dr. George or knows Dr. DG Treasury or somebody, and then their issue can be dealt with shortly. The systems obviously must be such that it doesn't need any intervention from my office or from Dr. George's office. So the point is well taken, and Chair, and it's something that I think maybe the GPA CEO can talk to. Honorable Morolong says, these issues are important. We have to be demonstrate the kind of, take that, and you've been consistent on that matter since we've been engaging on these matters in this committee, and we really, agree and accept your guidance on some of these things. Insofar as board membership are concerned, we National Treasury, where the law or the regulations allow, we do ensure that we've got membership in all of the entities that we should be part of, but Laura can talk. Is to join in Shahid and GPA and Land Bank. Laura and Study.
Thank you so much, DG. Thank you, committee. In respect of the vacancy rate of National Treasury, committee members are absolutely correct. This is a priority for National Treasury. We have taken an active cautionary stance in that we've needed to find the balance between filling our vacancies and ensuring the integrity of our budget for COE is maintained. And what we therefore did is we've identified the critical skills in Treasury and the critical vacancies, and we have we've mounted a significant campaign to have these filled. We're pleased to say, announce to the committee, I'm sure you saw the recent announcement that we have permanently filled the DDG budget office position, a critical position for us. As indicated by DM, we are doing the third round of interviews tomorrow for OCPO. We had to, after several failed attempts, we've had to go through a headhunting process. Those interviews are tomorrow, and shortly thereafter, we will be having interviews for the OAG. In terms of filling positions below a DDG level, we recently in December advertised 67 positions. Those closing dates were in January. We extended the closing dates on those interviews, those positions, to allow people sufficient time to be able to submit applications, given that it was over the holiday period. We are now going through the many thousands of applications we've received. Shortlisting has started, and interviews will be held over the next month for all those positions. Once those positions are filled, we will start a second round where we've identified additional positions that will then be the supportive roles to those critical posts. And once we completed, we believe that we will then have filled all of the critical positions. Having said that, DG and committee, Treasury is going through an organizational review process. It has been some while since Treasury did this, and it's important that we do this regularly, especially given that we did some shifting of priorities in our strategic plan. It's imperative that our structure best is able to support our strategic plan. So we're expecting that organizational review to be completed this year. And whilst it will not result in any decreases in our staff complement, it will certainly mean that we will be able to ensure that all positions effectively support our strategic purpose. Thank you, DG.
Thank you, Said. Sorry, you can come in.
Hi there.
Okay.
Thank you, Dondo, and thank you, Chairperson, and also thank you, Mr. George, for the question that you've raised. I want to talk through three issues. The first thing you've raised is the noise has become huge in terms of claims coming through and queries being addressed. And I'd like to draw you to what we have done with regards to that. We understand the noise, and the noise is in part due to the economic pain out there, and people are desperate. And as the GPA, we need to show empathy and try to provide the required services required. So I want to assure members of the committee that the GPA takes this matters very seriously. And so what we have done, and what members need to know, is that we do have a national footprint. We have 16 offices throughout the country, excluding head office, in order to service people through walk-in centers, not besides the telephone line. What we've also done is we have developed a self-service app where people can go onto the app and they can download all the required information with regards to where the processes are with regards to pensions. They can download their member statements. They can download IRP5 with regards to pension and taxation, etc., etc. So a platform has been created in order for us to do that. Then what we also have is an inquiry line where we've set up a dedicated unit under our legal services in order to work through emails, in order to ensure that we provide the required services. So rather than looking at and assuming that the noise is predominantly due to inefficiencies in the organization, it is a dual process with regards to economic pain on the one hand, and the challenges that the GPA faces as an institution. So I wish to assure Mr. George that the Director General and I had face-to-face discussions on the challenges facing the GPA. Part of that is institutional in terms of resources and capacity, and part of it is about dealing with exit management within government as a whole. And I've shared with the Director General the information with regards to how we deal with information and what we share. And I just want to share this with the committee. We are reliant on the receipt of completed documents from government departments. And we need to ensure that those documents are completed correctly to allow us to pay. We disburse on an average annually 113 billion rand. So we need to be absolutely sure that that money is allocated correctly to the annuitant, that is our pensioner or our member or our spouse support, etc. So we need to get that right. And so what we've done is set up a working team between ourselves and the Department of Public Service and Administration to ensure that exit management is prioritized in order for us to be able to pay pensions more expeditiously. With regards to the detail, I must say that the figures at the moment shows that there is an improvement with regard to quarter processing of pension in claims with regards to, and so I've seen a 5.8% quarter-to-quarter increase. That's not good enough, because clearly there are people that are in financial dire straits. But I wish to assure Mr. George that we have quarterly meetings with our Deputy Minister where he insists that we take service delivery as an institution seriously, and as the GPA, we are rising to that call from the Deputy Minister and to be accountable. But so our accountability lines run not only to the Deputy Minister and the Director General, but we're also accountable to an independent board who monitors our performance on a quarterly basis and clearly gives us if I can say, the right act when we do not deliver. So, Mr. George, I've had a discussion with the DG of the Treasury. I provided him with my thoughts on that, but every pensioner, member, annuitant should receive and will receive the required attention they deserve. Thank you.
Thank you, Jait. Ayanda, you want to come in?
Yes, DG, thank you very much for the questions. So the honorable members, Maniletsa, Dr. George, and Honorable Morolong, as well as Honorable Skosana, are touching on the same thread. So I'll probably just summarize their questions all together. So the first matter was around maybe us celebrating a negative outcome. You know, this one is actually quite interesting because it's a reducing negative, if I must put it that way. What we found when we came into office in 2020 was an undesirable state of affairs. And we talk about the issue of bank statements now, but what gave us a disclaimer was loans and advances that were not properly accounted for and poor control environment in terms of the loan book, particularly one that is managed by the intermediary partners. So for the past 2 years, we have been battling probably a 5-year pandemic with respect to the loan book of Land Bank. And we've come to reduce that negative to almost an unqualified. And I say that not celebrating a qualification, but to show you the commitment that has been put in to try and deal with this negative outcome, which was a much stronger negative when we took it on. In fact, when we put on the remedial plan, we realized quite a lot of things that the bank was not aware of. And as we insourced or cleaned up the book, we then realized that this was worse than we thought, and some of the decisions that were taken to do some of these insourcings were quite critical. So the issue of the bank statement is probably a small iceberg which managed to trip us definitely, but we are not celebrating at all the qualification. In fact, I think we were very aggrieved by the fact that we advance money to partners, but when relationships terminate, we are being held at ransom. So I took it quite personal. So the mere fact that it sounds like a bank statement, it goes far deeper than that. And there was a question around what mechanisms we are putting in place to deal with this thing from Honorable Skosana. Well, the termination of these contracts, is one of the issues that we are dealing with, because there's a belief that after the termination, the agent or the partner does not have to work on behalf of Land Bank anymore. Well, when these contracts were conceptualized, it was anticipated that should they end, the SLA partner or intermediary partner must put the Land Bank in a position where it is able to account for the book. And remember that over and above them advancing Land Bank money onto the sector, the Land Bank has paid management fees to these partners. So those fees have secured our rights and entitlement to those statements, and we shouldn't be apologetic about it. So we must go fetch that. To that extent, we have asked our legal team, even if they have to go to court to get the outcome that the Land Bank desires, we must go there, because we will then come back to you and say 2022 is another qualification, because we spend time negotiating with people who are not interested in what we are doing. So in order to protect the Land Bank interest, we've had to go on a legal route, and the strength of that route must make sure that we are able to secure how our monies have been used elsewhere. So please, Honorable Maniletsa, don't think that we are celebrating a negative. We are probably just advancing to you how much we've worked on this. And Dr. George is correct, Honorable Dr. George, about his experience and how he has had this before. Well, it's true, and I think it remains consistent that for a long time, the book was not well managed, and lack of management and controls, these have been highlighted before, and you asked a specific Treasury question, and I think they've responded to that. They've also indicated what the liability solution is, and just a brief outline there that for the past 2 years or 22 months, we have been working with lenders on 3 solutions, and the latest solution is what's on the table, but lenders have also given us some reservations about accepting that particular solution. So we are back on the table with lenders, engaging for the right solution for everybody in the room, one that must get us out of default, and one that must enable the Land Bank to focus on its mandate. And everybody, must then align their interests to making sure that the bank does get out of its event of default. So the liability solution caters for that in particular. So the question around it was a comment rather around the improvement from a disclaimer, possibly getting to a clean audit and unqualified. I think what I can share is that a week and a half ago, we started with our task team efforts. We've got a group of individuals in the bank who have formed themselves into a group, and we basically not only tackle the audit problems, we tackle the book problem. So we have taken the book and we look at it from all fronts to make sure that nothing trips us, including the related policies that must protect that particular book. So we have initiated that process again. That was the remedial process that helped us with the disclaimer. Now, all the models that were not calibrated or which were not working properly have been now improved, and the policies that needed to be in place have been put in place. And the AG has indicated, like I said earlier, that they would like to rely more on our control environment. And that's what we are working on fixing now. Unfortunately, we were tripped by a small bit that we actually didn't anticipate, but we also put mechanisms there so that we can get to that clean audit or unqualified state. And sadly, a qualification reads as an except for. But again, we are not celebrating the qualification, we are celebrating the drive within which people have worked long hours trying to fix a long-standing problem. So yes, it is our responsibility, Honorable Skosana, to make sure that those mechanisms are in place. And yes, it is not acceptable for such reasons to be advanced in future. So we must do what we can to make sure that we correct this, and we must leave no stone unturned. Honorable Abraham didn't ask us a particular question, but noted that there's an upbeat view about working with the AG. And I think the AG can share here, as they come in, the manner in which we worked with each other, engaging openly and dealing with issues, on a rather speedy basis where we can. And our relationship with the AG has been much stronger. And I think I must thank them for their partnership in making sure that the Land Bank gets out of a disclaimer of opinion. DG, those were the questions that were posed to myself. Thank you very much.
Thanks, and I maybe, unless if other colleagues have picked up some questions, whether Lorna or Imre, but that's what I have in my notes, Chair. DM, we can get back to you. Thanks, DM.
I think, DG, there was a question to the PIC. Can we ask the CFO from the PIC to answer that question? I think it was a question from Dr. George.
Thank you, DM, and good morning to the honorable members. And thank you again for the opportunity to come and present to you this morning. Honorable Dr. George correctly highlighted one of the findings from the Auditor General as it related to the disclosure note, and in particular two disclosure notes, one around commitments, as well as financial assets, and if any consequence managements have been taken as it related to that. So maybe to put up front, it's the first time we've received a finding on the financials, and that the reason for this particular finding, we then need to look at what the nature of the finding was. We needed to look internally to see, do we have the right skills? And we were able to take that. Was the finding due to any negligence or staff not applying themselves? And that was not the case. And when we looked at and did our postmortem with the Auditor General as well, we highlighted that the nature of the finding itself, or the root cause, was around key man dependency, where during that May period, we had key members of staff that were affected by COVID. And it also then put quite a bit of weight on internal controls. And hence, we've gone the route of addressing the problem the way we have, because we're trying to address two things. Number one, we're trying to not have key man dependency, so that the system continues to run even though you don't have key personnel there. And number two, by increasing the frequency of the documentation and review of these disclosure notes, where you typically only see them at the end of the financial year, you're then using also your assurance providers to give you and assist you in ensuring that these risks are correctly captured. So the root cause wasn't because of negligence or lack of capacity, and hence no consequence management was taken as it related to that, but it was dependency on key risk which mitigating controls were to address that. In instances though where we have found that there was negligence and blatantly the police not being followed around the irregular expenditure that was incurred. So the first part of the irregular expenditure, it's a disclosure of prior period that we disclosed based on the work of the recommendation of the Party Commission and the investigations that followed. So that was disclosed, and consequence management was taken against the implicated individuals. And even in the one that was identified during the year under review, where we did find that employees breached the policy, consequence management was taken. And it's something that the accounting authority enforces, and it's very serious and intentional about. And I'll leave it at the end, and thank you.
Thanks, Chair. Unless there are more questions, we would like to leave it there, but if there aren't any more questions, I can make my final remarks and then to just thank you but I need to be guided by yourself, Chair, if there are more questions.
Okay. I will check with members. It looks like there are follow-up questions, then you will come after. Before members come back for follow-up questions, we have got officials from, we have got the Auditor General here, Didimalo Singo and Polani Sokombela. Will you want to make observations in regard to the discussions so far?
Thank you very much, Chair. Good morning to you, Honorable Chair, honorable members, the Deputy Minister, the DG, the CEOs of the entities. Chair, I think on our side as an audit office, I think just wanted to take this opportunity to thank yourself, Chair, and the committee for this engagement. We're very encouraged that there is a specific meeting to look into the audit action plans in terms of how National Treasury and its entities are implementing the audit action plans to improve the audit outcomes. So this is something that is very close to our heart as an audit office. We have a very good working relationship with National Treasury as well as its entities. And Chair, when we came to table the audit outcomes in your committee last week through the BRRR session, we have highlighted some key findings and the key issues, and also made some recommendations also to the committee in terms of then the areas that were very critical, to be followed up with the entities, especially the development of effective action plans to address the audit findings. We are working with the entities and the Treasury as well to ensure that all the commitments that have been made in those action plans also are implemented, and also provide more recommendations as well to ensure that the audit outcomes they improve. One of the key issues as well is the issue of consequence management, and also based on the feedback also that I'm getting here in this meeting, there is consequence management that is being done. We will also be doing our own follow-ups because we are busy also now with the 2022 audits. We'll be doing our follow-ups on those consequence management as well as the progress that is being made by these entities. I think compliance with legislation is one, specifically irregular expenditure, is one of the challenges that this portfolio also is having, which is something then that preventative controls needs to be put in place to ensure that there's compliance with the procurement legislations and the laws. I have heard from the Deputy Minister, the DG, as well as Treasury, in terms of the filling of the key vacant positions. Specifically, I think the position of the Accountant General, the Chief Procurement Officer, and some DDG positions at the Treasury, which are very, very critical, very important, to ensure that there is service delivery at Treasury level. I am hearing that there are efforts that are being made to ensure that those positions are being filled. We have been highlighting also those particular roles because we believe that they are very critical for Treasury. So that progress is also being appreciated and also will be engaging as well with the DG on those particular, on the filling of those particular vacancies. If I may, Chair, I think the land bank, you will remember that when we came to brief you in November, the majority of the significant findings were addressed last year. We managed to sign the audit report of land bank in December last year. However, the issue of the documentation that we couldn't find on the bank statements on the loan book that is managed by the third parties was the one that was very disappointing. Because as Mr. Kanana has said, if they managed to find those bank statements, we would have been talking about an unqualified audit opinion for land bank, which is something that is very encouraging. And I think this needs to be celebrated in as much as it's a qualification, but I think for me it's the effort and the determination that we have seen from land bank, which is something then that is very good. But one of the things that is a risk at land bank, and that needs, I think, to be looked at specifically, I know that Treasury is overlooking this, but the liability solution at land bank, because when we signed the audit report in December, one of the things that we signed on the basis, especially on the basis of the going concern, Chair, was that the liability solution will be finalized by 31st of January this year. And we've seen that the 31st of January has come and gone, and we understand the difficulties in terms of agreeing with the lenders, regarding this particular matter. But this remains a very, very critical risk for land bank, because if this liability solution is not finalized, then it's very difficult for land bank even to do business or to execute its mandate. So I think I wanted to highlight that. I can see that I think the Financial and Fiscal Commission as well is not represented here. And it's one of the entities also that we've highlighted that have also some findings. But we are seeing consequence management as well from the Commission also, which is something positive. I think at JIPA as well, there are some improvements that we've noted, but the issue of consequence management was the issue also that we've highlighted when we came here at JIPA, and we are working with management as well, just to ensure that we are making a follow-up in terms of the implementation of those consequence management and the preventative controls that needs to be put in place. And there were, as well as the Gtac. I'm also hearing the feedback about the Gtac and consequence management there. Yeah, so I think that is basically then our observations. We are continuing to work with the entities to ensure then that the audit outcomes are improved, because one of the key issues also that we are also putting a spotlight on as an audit office is service delivery. Because entities, all of these entities are there to ensure that the services are delivered to the citizens of the country. And you know, one of the things then is to ensure then that the focus shift. They master, you know, in terms of the skills of preparing credible financial statements, preparing credible annual reports, so that at least going forward we can focus whether there is service delivery in these entities. I think IRBA as well, I think has regressed, you know, from because they've been obtaining clean audits for I think IMRE was talking about 11 years of getting unqualified audit opinion, but I think 10 of those years they were getting clean audits. But because of the governance challenges, I think that IMRE has highlighted here, we have seen them tripping on you know, specifically with on compliance with legislation, irregular expenditure, and we are very hopeful that they will bounce back and also get back to get the clean audits, as well. So I think these are my observation, but Madi, as well as anyone in my team can add in terms of anything that I might have missed. But we really appreciate the opportunity. Thank you very much.
Thanks, Mr. Sekom. Any input from Jim?
Thank you, Chair. It's Madirimalo on the line. I think Polani has by and large covered our observations as the Auditor General. I think maybe one point that one may just emphasize is that when it comes to the issue of audit outcomes, it is a combined effort, both from management, the audit committee, as well as internal audit and us as the Auditor General. So management does play a critical role in terms of ensuring that these audit action plans that have been discussed here are fit for purpose, specifically talking to the issue of properly analyzing the root causes that have led to these findings, and ensuring that whatever actions are being discussed here are then tailor-made specifically to address those challenges. And one cannot also then underplay the role that the internal audit function is going to play in order to ensure that at the ground, these action plans are implemented and that they are effective, as well as the role that the audit committees are then going to play in terms of that oversight, where these plans would be tabled on a quarterly or more regular basis, depending on the need, to ensure that we do see sustainable improvement in outcomes. I suppose from our perspective, really what we would want to emphasize is that what is important is really to prevent this internal control deficiencies from happening in the first place. And therefore, we really urge management to really concentrate on the preventative controls that need to be in place in order to ensure that these outcomes can be improved and are sustainable going forward. And I think when Polani was also dealing with the issue of our assessment of these plans, as part of our interim audits, we will be looking into these plans. We also do have an initiative within the Auditor General Office, which we term the Status of Records Review. And as part of that, we will then be looking at the progress in terms of implementing these plans, and we would be in a better position to provide more feedback on this at a later stage. I just wanted to emphasize that, Chair. Thank you.
Okay, thanks, Ms. Singo. I see there's a hand from Imre from IRBA. Do you want to say something before I go back to members?
Yes, Honourable Chair. I just wanted to mention that there were some questions from Honourable Member George, Skosana and Abraham that I have not yet answered. So I was just asking if I will still be required to answer those questions.
Okay, you can respond to those questions now before I go back to them for follow-up questions.
Thank you very much, Chair, for the opportunity to respond. To Honourable Dr. George's question around the impact on the credibility of the RBA, yes, we are aware that that there's a possible impact on our reputation as a regulator, especially if it is noted in the absence of the context. It is for that very reason that once when I was appointed in February, together with the new board, we immediately acted to investigate the matter. But we believe that it is important that the context of the nature and the type of how the irregular expenditure came to be considered in our instance. Yes, we acted proactively by being prudent and transparent in that we self-declared the irregular expenditure, and we fully disclosed it in the financial statements prior to the Auditor General submitting the financial statements to the Auditor General. And we did not get any except for qualifications on that particular disclosure. We will definitely strengthen, and I think the response that we took was this is something that needs to be dealt with decisively and promptly, and we certainly will and have already strengthened several aspects of our supply chain management process and monitoring and controls around it going forward, to appoint, but still appoint the expert investigators to meet our mandate to successfully investigate high-profile public interest matters involving our auditors. There was then a question from Honourable Members Kosana. I think Polani from the Auditor General did touch on this, that yes, we've received unqualified financial outcomes for the last 11 years, and for the last 10 years before the 2021 financial year, we had clean audits, so there were no issues reported. And yes, we are definitely hopeful that the measures that we put in place will not yield another qualification, or sorry, another note on non-compliance. It wasn't a qualification, but another note on non-compliance in that we can again achieve our clean audit status. That is something that is very important to us. Honourable Members Kosana also asked around the reasons why the previous CEO left after 7 months. Honourable Member, I apologize, but yes, I was not involved in that particular process, which was dealt with by the former caretaker board at that stage. I only became involved when I was approached to act after the CEO left. And all that I know is that the departure of the CEO was announced publicly as a resignation. So unfortunately, I don't have more information on that. Then Honourable Member Abram made a comment, or rather to say that forensic skills are not a scarce skill. And I think if the Honourable Member can allow me just to explain why we believe that external investigators are a scarce skill for the IRBA in particular, is that the board and the Parliament previously requested us, the IRBA, to prioritise high-profile public interest investigations based on the negative perceptions that it brought to the auditing profession and the RBA, resulting from audit failures and significant losses suffered by investors. So the nature of these investigations are as such that only one appropriately qualified and experienced person can conduct an investigation. And this is because the investigator requires direct knowledge of the issues identified and will be the factual witness testifying should the matter proceed to a disciplinary hearing, which is a court setup. So these investigators are experienced chartered accountants who have excellent technical knowledge and on the international auditing and accounting standards on a particular industry, such as a bank, for example. And what contributes to our limitation of tapping into to auditors and chartered accountants with this extensive experience to stand up in court as an expert witness is that we cannot use investigators that are currently practicing auditors because of the independence issues that that brings. So that really narrows down the pool to a very limited number of experts in the country that that have the wealth of experience and knowledge to testify on these high-profile matters. We unfortunately cannot afford to carry specialist external investigators. We have investigators internally who are general investigators, and yes, they are also qualified as registered auditors, chartered accountants, and they also are qualified as forensic investigators, the majority of them. But it's about the specialist knowledge of the investigator to stand up and deliver that evidence in a court setup. Chair, just one more point that I'd like to make on that is that what contributes obviously to the single source that was followed to date, and it's basically what I've mentioned, but also at the beginning of an investigation, you don't know, is this investigation going to be dismissed after a month or 2 or 3, or whether new evidence during the investigation comes to light that perpetuates the investigation, which sometimes can go on for longer than a year. And for that reason, it's very difficult to budget upfront to say this investigation is going to be a 3 quotes, or it's going to be it has to go out on tender, etc. So that is an unknown factor at the beginning of an investigation, which also made it quite difficult. But at the time of commencing investigation, the complexity of the investigation is generally unknown for procurement purposes. But I think it's important to note that we currently only have 2 external specialist investigators on high-profile public interest matters. And I'm again using the example of African Bank that was successfully prosecuted last year using our specialist expert on auditor on banks. We've also subsequently received, we've motivated in detail to PEOU unit at Treasury for a departure or a deviation approval on one of these 2 specialist investigators. And I believe we've received that deviation letter from Treasury last year, so that investigation is currently continuing. And we are in the process of putting the panel together of these expert investigators so that for a period of time, so that when an investigation comes along, we can also tap into the experts that are on the panel after following that panel procurement approach, which is allowed in terms of the procurement processes and the framework. And yes, we would like to thank the Auditor General. We are working closely with them and cooperating with the Auditor General teams. And thank you for the opportunity to answer the questions. Thank you, Chair.
Thanks. Let me take follow-up questions from Dr. George and Honorable Skosan.
Thanks very much, Chairperson, and thanks, Land Bank, for the feedback on the liability solution. I just wanted to know whether there is a particular time frame in mind, because it has been going on for quite a while, and you know, it does need to be brought to conclusion. So is there a specific time frame that you have in mind? And if so, then what is it? And then also, is folding the bank one of the possible solutions? Thank you.
Thanks, Dr. Cho. Honorable Skosana, are you still there?
Yeah, no, thanks, Honorable Chair. I'm
okay.
covered. Yeah, my question was on IRPA because they had not responded to our questions. So I'm covered.
Any response from land bank?
Maybe let me come in. Folding the land bank is not in it's not in our radar now. All we are doing now is to as much as we can save the land bank, let them perform the important function that they perform. They are a critical player in ensuring food security in the country. So we continue to support in far as that is concerned. The liability solution, Duncan can come in. We are working flat out. I mean, we've been meeting with the relevant lenders, and we have been engaged. I'm meeting with tomorrow. I'm meeting with others, including MIGA, the World Bank, because they also have a guarantee exposure there. So we are, as much as possible, trying to engage them to find a solution that's allowable. And the bank, obviously, and the board are also engaged. So the support we are offering them, and it's also about the resources that we provided at the time of the budget, the 5 billion and the 1.5 and in 2021, 22 and 1 billion in each of the outer years, because that on its own is to supply, to address the liquidity challenge of the bank. And obviously we have to do it in the most fair way. And so that's why we're spending a lot of time in ensuring that we find each other, and then so that we can save the World Bank, the land bank. They're able to move on their own. They're able to be strengthened as time goes on, and support, including the mandate of supporting other emerging farmers and developing farmers. Deputy Minister, thanks.
No, thanks, DG. Thanks, Chairperson and the colleagues, as well as colleagues from the entities. Chair, I think it's very valuable to be called as a finance family to come and account on the implementation of the audit action plans, because I think this helps us to be held accountable during the year, in year. Because my little experience is that annual audit outcomes are a function of what you do during the year. So this exercise, Chair, adds a lot of value to the audit outcomes and the financial health of our entities, including ourselves as National Treasury. And right at the beginning, I've just highlighted the importance of financial accounting, which is that financial health is important for us because it enables us to account to the taxpayers, for them to hold us accountable on how we are managing public finance, but also to the investors. They need to make informed decisions on whether they lend their money to properly managed entities. And for us, Chair, AG is very, very important. It's a very important institution in our democracy. In actual fact, it's a creature of our constitution, and it enables us, as I said, to account to South Africans, because it's the constitution requires the Auditor General to audit, report on the financial statements and financial management of the state, including our entities, Chair. So it is indeed the only institution that is by law has to audit and report on how government is spending taxpayers' money. So we take it very seriously, and we take AG very, very seriously. However, Chair, I think I'm concerned about the growing tendency of some of our entities in government, at least not in National Treasury, a tendency in which AG is increasingly taken to court because of the audit findings. I think, in my view, this is very counterproductive. I'm not saying that AG can be taken head on, where entities and departments feel that AG has erred. But in some of the instances, you get a sense that people just want political accounting, not financial accounting. And instead of working on the findings, I'm worried that some entities, some departments, they have a tendency of rushing to courts. And I think this committee needs to have a view on this. Otherwise, government departments and entities will waste a lot of money on legal fees instead of improving on their financials. And like I said, I'm not saying that people are perfect, including AG, but I think if we don't arrest this trend, we may find ourselves accounting more in courts than accounting to our people based on what we need to correct in our financials. And lastly, Chair, yourselves as public representatives are also very important as instruments to ensure that our democracy work. And one of the components of democracy is to hold anyone accountable. And therefore, we appreciate the role that you play as public representatives, calling us to come and account, holding us accountable on how far we are in implementing the remedial actions to deal with the weaknesses identified by the AG. And Chair, we will ensure that we take forward your suggestions as well as critical feedback. The critical feedback that you've provided will also form part of how we work going forward and how we deal with some of the concerns that we've basically raised. And let me thank the DG and his team and all the colleagues from the entities and the finance family for availing yourself and preparing very well to enable us to account to the tribune of our people, which is Parliament. And I really want to thank you, Chair, and the honorable members until we meet again. Thank you.
Thanks very much, Deputy Minister. Let me make closing remarks. Let me thank the National Treasury and the entities for putting in place audit plans, audit action plans. It is quite very important that these action plans that we have put in place be monitored from time to time, so that it should not be like it's a matter of compliance that we have the audit plans, but they should be adhered to. And also, thanks very much, Deputy Minister, for raising the issue of the AGSA, that the decisions of SCOF, which is Parliament, and audit comes from AG, are mandatory for departments and entities to implement, because people might think that it is optional. No. And if you remember 3 or so years back, we have tightened the legislation in regard to the powers of the AG. The AG derives the mandate from the Constitution and the legislation. whereby Chapter 9 of the Constitution establishes the AGSA as one of the state institutions supporting constitutional democracy. The Constitution recognizes the importance and guarantees the independence of the AGSA, stating that AGSA must be impartial and must exercise its powers and perform its functions without fear, favor, or prejudice. So as you have said, Dr. Masondo, why should an entity or a department take the AGSA to court, whereas there are mechanisms that have been put in place by the Constitution and the legislations to deal with issues where there are differences in regard to an audit outcome. So the Constitution guarantees that the AG should exercise its functions without being intimidated by any other entity, or should not be seen to be in favor of any entity or any other department. And furthermore, the functions of the AG are described in Section 188 of the Constitution and regulated in the Public Audit Act 204, which I think has been amended for now, which mandates the AG to perform constitutional and other functions. And the constitutional functions are those which the AG performs to comply with the broader mandate described in the Constitution. And the Section 4 of the old Act, which I think has been amended, makes a further distinction between mandatory and discretionary audit. It goes on and on and on and on. So it's unfortunate if there are entities or departments that think they should take AG to court. Well, we're not saying that there are institutions which are above the law, because we are in a constitutional democracy. But if there are issues, find a way of handling those issues properly. The issue of vacant posts, Deputy Minister, should be attended to. We are talking about posts that are budgeted, not all the posts. We know there are many vacant posts, and now with the tight fiscal framework that we have, not all posts are budgeted for, but those that are budgeted and very critical, like the Accountant General at National Treasury, should be filled. And those that are also budgeted for in the entities, can those posts be filled as soon as possible? Now that the courts have made judgments which have been challenged so far, that Treasury can directly intervene in the running of a municipality, which is having challenges in regard to administration. It calls upon the National Treasury to have more competent personnel to perform such a function. Because as much as you are Treasury, you are also a Department of Finance with a clear role that you are supposed to play both as a department and as National Treasury. But now you have got an added responsibility, working together with Gtac to monitor and even run a collapsed municipality. So the sooner you fill some of these critical posts, the better. So as this committee will continue to use audit outcomes and findings as tools to conduct oversight on the department and the entities. This year, we are going to spend more time out there in the field. In the past 2 years, there were challenges in regard to regulations on regarding COVID-19. Now that they are relaxed, we have put in place a schedule to visit the National Treasury and entities. For this quarter, on the 29th of March, we are coming to National Treasury there in Pretoria, Tshwane. You remember there are issues of IFMS and others that we want you to brief us about in action while we're there at Treasury. The following day, on the 30th of March, we'll be visiting the Land Bank. CEO of Land Bank or chairperson, can you make sure that by the time we come, you also show us the service level agreement that you have signed with Unui Group? Because I don't understand this story that there were an intermediary, then the next thing, there are issues with them submitting certain information they refuse to provide information required to verify disbursements and repayments. Why should that be so? So we want to see your SLA and other arrangements that you have with them. But of course, there are other issues that we have identified the last meeting we had with the AG that we would like you to respond to, because the Land Bank is too important to can be folded. Why should we fold the Land Bank? There are so many small and emerging farmers who can't have access to big 4 commercial banks out there who rely in the main on the Land Bank. Remember, in the past, we used to have agricultural corporations in different provinces. Now that they are no longer there, small-scale farmers rely in the most, in the main on the Land Bank. So this is a very, very important bank for us, and it should not be allowed to collapse. So Treasury, you will also be there when we visit the Land Bank the following day on the 30th. And we will be glad if we can meet some of the investors so that we understand the view of the investors in regard to how can we deal with the challenges of Land Bank. Then on the 31st, we will be visiting the FFC. As the DG has alluded to, FFC is independent. It accounts directly to Parliament. It's a very important constitutional structure. And we'll appreciate that Treasury should be there. During those days when Professor Daniel Plakis was still alive, may his soul rest in peace, he once raised issues that it's like they are there, but it's like government does not give them the status that befits them as defined in the Constitution. By so saying, it's like their recommendations are disregarded. I'm not saying that's the conclusion, but they raised issues. So Treasury, can you please be there when we meet FFC? Then in the second quarter, we are going to identify other entities that we'll be visiting. We'll be doing this until the end of the year, so that we don't only engage you on meetings like this, but we come to where you operate and we have the feel of where you are and the challenges that you are facing. So thanks very much, honorable members of SCOF, Deputy Minister Masondo, Dr. Masondo, the DG, and the entire team from National Treasury, Auditor General of South Africa, and the heads of various entities who are here on the platform, who came well prepared for this meeting. The entire team from Parliament, the support team of SCOF, and other officials from Parliament, PBO, communication team, the legal team, and other officials from Parliament. Thanks very much. Alan and Tebuko, tomorrow we are meeting to get a report. Is it a report or from, is it NetLeg?
Chair, no, that's next week. Tomorrow's meeting is National Treasury and FSCA, SARB, and Prudential Authority on bills recently referred to the committee. It's financial sector and deposits bills. It's 2 bills, a money bill and a section, if I'm not mistaken, 76 bill. So that briefing is tomorrow, Chair. I'll be sending out the link and the relevant or the necessary documentation immediately after this thing.
Yeah, and there are those 2 bills that I saw a correspondence from chairpersons, the chairperson of chairpersons, saying that we have been prioritized them in terms of our program this year. Are they in our program, or what are we supposed to do with those bills?
For this term, no, Chair. I've contacted Mr. Lees. He was the initiator of the bill. You'll notice that it's 2 bills with the same title. They were introduced in different years. So I'm just waiting on Mr. Lees's clarity. I know the other member that introduced the bill. I don't think he's a member of Parliament. His term expired with the previous committee. So I'm not sure how, if they're going to merge the bill into one. So I'll also send an email to Frank just to clarify what or how the committee must approach this one. So as soon as I've spoken to Mr. Lees and Frank, then I'll brief you on that, Chair.
Oh, okay. No, thanks. Thanks very much. The meeting is adjourned until we meet again tomorrow.
Thank you, Chair.
Thank you, Chair. Bye-bye.
Thanks, Chair. Bye.
Thank you,
Thank you, Chair.
Thank you, Chair.
Bye-bye.
Yeah.
Recording stopped.